Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and we're going to take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions, and to that end, you can either call us on the number that you see at the bottom of your screen, and that is the landline number, or you can send us a message on the number on the top of the screen. That's the WhatsApp number. And Mahima and I will be able to respond to you directly. Now, let's take a look at where the markets are right now. And the indications at the start were that it's going to be another day languishing in the red. But the reality turned out to be very different. Very soon after the start of trade, you saw gains, and we've built on those gains through the session so far. I guess to a certain extent, we were waiting for this to happen because we've seen quite a bit of selling and pressure on the downside, and you were expecting there to be a bounce around that 22,000 mark. Currently on the Nifty 50, we're trading very close to that 22,250 mark, and there's more strength, in fact, in the broader markets, where you have the mid-cap index that's gaining about 1.5%, and you have the small-cap index that's up about that same amount. As a result of which, the market breadth tilted very firmly in favor of the advances. Let's see whether this strength continues through the course of the day. Of course, as there normally is, there are pockets of strength and there are pockets of weakness. Let's talk about the strength first. You have IT that's up and about today after languishing over the past few days. The pack as a whole gaining about 2% or so, but there are a few individual names that have made headlines. Among them, of course, Coforge, which is gaining about 9% on the back of its largest ever deal win. It's a very significant win from Sabre, which is a long duration deal win. It's over $1 billion. And so this is being given a very key thumbs up, or very clear thumbs up from the street. But everything from a Persistent to an L&T Tech to an LTI Mindtree, Tech Mahindra, all gaining over 1% right now. Let's take a look at some of the other sectoral performers. In fact, let's pull up that map as well. You see green across the screen. Metals as a pack doing particularly well, and what is emerging from China is being seen, of course, as a positive. The pack as a whole gaining about 2.5% or so. Realty as a pack was underperforming in the recent past. It is gaining ground again, up about 2% or so. Auto got beaten down yesterday in trade, particularly the two-wheeler manufacturers. It is up about 2% or so. So all of the sectors and the stocks that took a bit of a battering in trade are in fact gaining ground. A couple of stocks that are not doing particularly well, I'll mark some of them. Bajaj Finance is one of them because of regulatory news once again. It's recovered from the low point of the day, but there are strictures that the RBI has apparently come up with related to a component or a small sub-segment of the lending space, which has to do with a line of credit being given. It's unsecured, and there are measures that the RBI is contemplating to curb some of that lending. Apart from that, you have, of course, Chola Finance, which is also down about 1.5% and has recovered from the low point of the day. But this is also a stock that is getting affected because of this very same reason. BSE is the last stock that I will mark today, and that is a stock that is really taking a battering, but it has come off the low point of the day. It was down close to 10% at one juncture at the start today. It is now down about 5% or thereabouts, and this is because the NSE has shifted its expiry day for derivative contracts weekly to Monday, and this is considered bad news for the BSE because it has its own weekly expiry for the Sensex on Tuesday, and there's an expectation that this will affect the volume as well as the premiums that they charge for their Sensex contracts, as a result of which you could see a decrease in revenue. A response from the BSE is still sought in terms of what they intend to do to curb this potential fall in revenue. Mahima.
Right, absolutely. With that, let's also welcome in our guest for the day, Rajesh Agrawal, Head of Research, AUM Capital, joining us, and Akshay P. Bhagwat, Senior VP at JM Financial, also joining us. Welcome to both of you, gentlemen. We also have, our first caller lined up for the day. Sampath Balaji is calling in from Chennai. Sampath, a very good morning to you. How can we help you?
Good morning. I hold 600 shares of Shakti pumps bought at 120.
Okay.
Wow.
Can I buy more? I'm a long-term investor.
Okay.
Can I invest more? I need to buy another 400 also. Can I do it?
Okay. Sampath, I just want to understand that what was your thought process, behind buying Shakti pumps, because you entered at the right levels, I believe.
Largest manufacturer of solar pumps big order from Uttar Pradesh.
Okay. All right. Okay, Sampath, got your query. Rajesh, very good morning to you. I'll come to you. Shakti Pumps is the counter and Sampath is sitting on a profit of over 4 lakh rupees. What's the view like and what's the outlook like?
See, outlook is very positive. Good morning, Mahima. Good morning,
Alex?
Alex.
I see. I'm not the only one, Rajesh, that has problems with names. Welcome to the club.
It's just because I'm sitting with you for so long of time that I got that.
Yeah, the point that you were making on Shakti Pumps.
Sorry.
No problem.
The number this quarter was not that good, I would say. But long-term prospects looks really good because of the fact that it's one of the largest submersible pump manufacturers in India. And the government focus on rural economy and all, I think this company is going to do well. Maybe a target of 1,000 odd rupees in the next 6 to 9 months is quite possible. So at this point of time, I would say stay put with the stock.
Stay put with Shakti Pumps. And in any case, I guess, let's pull up the intraday chart, please. I just want to know if it's at circuit. It is, in fact, at circuit. And so, therefore, if you want to buy it, it's not possible for you to do so today. Let me go across to Akshay just very quickly on the charts. Of course, you can't buy today, but when given the opportunity, would you deploy further, Akshay, in Shakti Pumps?
First of all, good morning, Alex and Mahima. And Shakti Pump, the longer term charts are very strong. It is just the short term with the pain of the market. Also, this stock has borne the brunt of some rough patch. But overall, I think it's a bounce back from its 200-day moving average. Overall, the technical structure is pretty strong. And I believe 750 is a very strong support zone, which is in the making. So yes, I would recommend to hold whenever you get the opportunity, when you can buy slightly at higher levels in case today you do not get it, since it is on circuit. But overall, looking at the broader setup, the stock is all set again for revisiting levels of 1150.
Okay. And incidentally, quite a few stocks testing 200-day moving averages. We were talking about this earlier on in the session for the Nifty 50 as well. Only 20% of stocks trading above their 200-day moving average. So there was bound to be some interest at these levels. Now, speaking of drop from life highs, let's pull up Ganesh Housing Finance, because we've got a question from Vinod, who's writing in from Mumbai, and he's wondering, it's down about 20% from the life high, and he noticed a breakout yesterday and a continuation today. The stock is up about 1% and 1.6% or thereabouts. The question's for you, Akshay, on the technical basis, on the charts, is there a case to be made for further upside, and would you deploy at this juncture?
Well, for Ganesh Housing Corporation, if I look at a slightly medium-term charts, it's broken the support of 1200, so that's slightly a negative development. But from a longer-term perspective, here you need to have minimum 6 months of time frame of holding. Then the price structure is good. So overall, the belief is that there is a trendline support somewhere around the levels of 950 to 1000, and recently the bounce back has come from near the level of 1000. So be open to averaging in case these levels revisit again on the lower side, but the thought process is 1000 is a very good support. The recovery will not be fast, but whenever it recovers, the broader expectation is with a time horizon of a year minimum, the stock can revisit levels of 1400 plus. So hold from a longer term perspective. Short term, there will be some hiccups, but broadly the technical structure from long term is still positive.
Follow up, at what level would you buy?
At 1032, I would buy some quantity at current market rate, even if it's a long-term investment. If I want to micro time it, then I would, for short term, then I would wait for levels of 1000.
Okay, all right. I believe we've got our second call of the day, and Rishikesh is calling us from Maharashtra. Hi, Rishikesh. Good morning. How can we help you today?
Yeah, hi Alex. Good morning.
Good morning. Please go ahead.
I have bought Wadi Renewable Technology stock
Okay.
at price point of 2300, and currently I'm holding 55 shares of it, and with a loss of 80,000. So, what would you recommend? Should I buy more stocks to make it average, or should I hold for it?
Okay. Your buy price is 2,300. All right. Very elevated. Though the stock is bouncing back today, Rajesh, the question's on the fundamentals, I guess, because we've seen significant erosion. What would you do with something like this?
I would try to exit at higher levels on every bounce. It would be prudent to get out of this stock because even at these levels, I think its valuations are overpriced. There were some issues. The CFO resigned some time back, and those things happened. So I think on fundamental side, it would be better to wait at this point of time because because of the market condition, it has fallen very high. But around 950, 980 odd levels, I would suggest to exit.
All right, so that's the view with respect to Vary Renewables. The next counter that we're talking about is Tata Steel. Mahesh from Bengaluru wants a view on this particular counter from a longer term perspective, and he wants to know what should be the target to invest as well as the stop loss. Now, Rajesh, in terms of Tata Steel, our metal analyst today analyzed that why Tata Steel has not been performing well. 1 year it's down by around 8%, and this is because Tata Steel Europe has been a key dragger for the company. It entered Europe in around FY 2008, but since then it has made an investment of approximately 1.7 lakh crore, and since then it's been incurring losses of around 29,000 crore. So overall view is that the Tata Steel Europe is the reason why Tata Steel has not performed well since the past few quarters as well. With respect to a longer term view, what's the outlook like for the counter, and what are the kind of targets that you can foresee, and what are the light levels to enter into the stock?
See, I totally concur with the gentleman's view that just because of European operations, the stock has been a drag. But domestic demand is good. Domestic capacity is good. They have been adding capacity. They are talking of reduction of debt. Going forward, we believe that as per steel organizations' data and all, we believe that steel demand is going to go up because of high infrastructure projects coming in, capex coming in, even real estate is doing well. So steel as a whole is going to do well, out of which Tata Steel, I think valuations are very attractive. These levels are good levels to buy. Maybe because of market condition, it may correct for 5-10 rupees here and there, but that's a different thing. For a long-term investor, I don't think that should matter. We have a target of around 180 odd rupees in the next 1 year. So it's a buy from our side.
Buy with a target of 180 for the next 1 year is the view coming in on Tata Steel. Our next caller, Shweta from Hyderabad, is calling in. Shweta, very good morning to you. How can we help you?
Hi, Mahima. Hi, Alex. Good morning.
Good morning.
My question is regarding Tata Railways.
Okay.
I have 114 shares at 1752 price value.
Okay.
I know I cannot recover my losses completely near term, but I want to know, is there any chance at least 50% of my losses can be recovered so that I can be cautious and take an exit?
Okay, got your query. Akshay, I'll come to you since she's looking for a near-term, exit for the particular counter. She's sitting on a loss of around over a lakh rupees, and Titagarh is the counter. What's the view like? Should she wait to recover some of her losses? Her target is to at least recover 50% of her losses.
If the objective is to recover 50% of the losses, the suggestion would be might as well shift to some other stock in the rail space if you're keen on this space. And technically, IRFC has a better chart setup than Titagarh Vegans. Titagarh Vegans has a negative price structure from the short to medium term perspective. Obviously, if the market recovers, since it is highly oversold, then you might have a relief rally kind of a phase where Titagarh might see levels still around 740 to 750. But ideally, that's the place where you need to take an exit. Shift over to IRFC where the targets can be more promising. I'm looking at targets of around 150 odd levels from a time horizon of 6 odd months. So the scope is more promising out there. So shift is the advice if you want to recover 50% of your losses.
Also in the rail space, Chandi is writing in from Kottayam in Kerala and asking about Rail Vikas Nigam, and I'm coming back to you on this one, Akshay. Bought at levels of 39. The question is, should he continue to, I don't even know, can we pull up the very long-term charts, because I want to know if this is actually right. Am I reading this number right? Yeah, so it's quite possible that he did, but he's holding for the long term. So I'm wondering whether you would suggest taking some money off the table. He's bought at levels of 39, and so he's making quite the profit in this counter.
Yes, you have to take some money off the table, because if you have invested at 39, you've also seen levels of 620 20 plus, and again it's back to 320. So, almost half of the profits shaved off from the top levels. I think there's a small pullback in the making. 380, 390 is where this respite rally might work out for rail stocks, RVNL especially. This should happen within a time frame of 3 to 5 months. That's the point where you need to take off at least half the quantity of your profits since you have entered at very lucrative levels.
All right, that's the view on RVNL, and wow, kudos to you for having held out and despite the fall that you've seen, right? So you've made quite a considerable amount of money. 1.4 lakh rupees despite the fact that the profits have halved, and that's saying something. We've got our next caller. Sagar is calling us from Hyderabad. Hi Sagar, good morning. How can we help you today?
Hi Alex, good morning. So I need a view on this Pennar Industries.
Okay, Pennar Industries, what do you want to know?
Can I buy now or at right time to enter?
Okay, so it's involved in precision engineering products. It's a small company relatively, 2,178 crore. Why is this attractive to you, Sagar?
So the sales growth and everything is looking promising.
And you've studied the last quarter results, or have you gone further back?
From actually last year, I'm tracking before last year.
Understood. Rajesh, I'm hoping that you have a view on this. It's currently trading at 161, up about 3%, 2,200 odd crore market capitalization. Would you pick this or would you pick another stock?
If given a choice, I would definitely pick another stock, but since the gentleman has already taken that, so I would say at this point of time, stay put with that. Because of the fact that...
No, let me clarify. Let me clarify. I think, Sagar, have you bought yet?
No. I wanted to buy.
You haven't bought yet. So basically, am I right in assuming that you want to get into the engineering space and you're looking for prospects?
Yeah. No, actually this company was good, so I wanted to check whether it is.
Okay, I got your question, Rajesh. So he hasn't deployed money yet. He thinks that the sales and the P&L that he's looked at over the course of the last few quarters is positive, and he's wondering whether to do so.
See, I totally concur with the view that the numbers are quite positive, but recently they have signed a JV with one of their subsidiaries to produce solar modules for domestic and international market. All things are good, but the problem is the size is very small. And when the market is in downturn, these kind of stocks, they are quite a big now. So it would be very risky to enter at this point of time. Maybe some other better counters would be a better choice to go for. Because of the correction, a lot of good companies, strong, bigger companies have corrected by 20-25%, and they can be a better choice to buy.
Okay, that's the view with respect to Pennar Industries. The next counter that we're talking about is Amara Raja. Amol from Noida has bought 100 shares at 1498 a piece, and he wants a short-term view on this particular counter. Akshay, what are the charts looking like, and what are the supports and resistance that you're seeing?
Yeah. So for Amara Raja Energy, I hope it is. The support is roughly around 900. That's the low point of the last couple of months, and time and again we are seeing a bounce back from this particular level. So I believe a short-term bottom is in the making around 950 odd levels as I currently look at, and this recovery, if it happens, can see the chart see the levels of around 1150 to 1200 within a time horizon of a couple of months. So yes, ideal for a trading pullback, short-term investment. Keep a strict stop loss of 925 and target around 1100 to 1150.
Okay, 1100 to 1150 is the target for Amara Raja. We have our next caller, Murli from Bengaluru is calling in. Murli, a very good morning to you. How can we help you?
Very good morning, and thank you for taking up my query.
Sure, go ahead with your query.
Yeah, I bought Bharat Rasayan,
Okay.
a company in the field of pesticides and other chemical.
Okay.
I got 67 shares at an average price of 11,833.
Okay.
This I am holding for almost now since September 24.
Okay.
The point is I am incurring a loss. All parameters is good, but it is not, I am still incurring the loss. What shall I do?
Got it. And you're a long-term investor, Murli, if I'm not wrong.
Yeah, no, it's locked up almost now. You can see here 6 months over. I don't know how long I should hold.
Okay.
That's what.
All right. Okay.
That's my price.
Understood. Rajesh, I'll come to you. Today the stock is up by about 5.5 odd %. But overall, he's bought it at elevated levels of 11,833. What's the view like for Bharat Rasayan?
See, fundamentals are okay company, I would say. It's into pesticides and all, catering to agrochemical sector. As we talked about, rural economy going forward, doing very well. This company is also going to give good numbers going forward. But the only problem is the gentleman has bought it at very elevated levels. So he has to wait for a longer period of time to at least recover his investment with some return. So maybe at a time horizon of 1 year or 18 months would be required to the stock to achieve at least 20-25% upside from these levels. So at this point of time, it's a hold from a side. If for any reason it falls to maybe around 8,000, 8,500 odd levels, there one can even add.
Even add at those levels that is being suggested. Let's talk about BEML and let's pull up the slightly longer term charts, and it is taken quite a battering over the course of the last 3 months or so, like a lot of other stocks have. The stock is down about 42% in that time frame, and it's trading at around 25.45. The question is from Satyan, and he wants to know from Akshay whether these are the levels to enter, because even a while back, before the markets turned, it was looking bullish. What does the chart indicate at this current juncture?
Well, it's more of a short-term trading bounce back, which I look at. On the daily charts, the prices are heavily oversold. You have a recovery slightly coming in from the levels of the 200 moving average. That's on the weekly charts. So ideally, it's more of a trading respite rally, which can target around 2,800. So that's the target in the making. If you are keen on short-term buying, yes, you can go ahead with stop loss below 2,300. If you're already holding the stock, then the view is to take an exit, but slightly at higher levels of around 2,800.
Okay, all right. Those are the key levels to watch out for in BEML. It's down about 3% in the week so far. Let's go across to Avi now, who's calling us from Kolkata. Avi, good morning. If I understand correctly, your question is on HUL.
Yes, that's right. Good morning to all of you.
Please go ahead.
I've got 3620 quantity of Hindustan Unilever bought at 2594. So I can wait for 1 year. So I was just wondering, what could be the price target within this year or within a year span like that?
Okay, so you've got a very significant quantity, Avi. I'm just trying to understand the thought process here. When did you buy this?
Actually, I had bought it. It was after the last year general election. So I thought there were a lot of money being distributed and the focus was on rural sector, the rural community. So my idea was HUL, it has got a lot of brands that are catered to that sector. And so I just thought why not purchase this? And after that it did go up to 3,050, but I didn't sell at that point of time.
Yeah.
Since then it has all my profits of 14-15 lakhs have come down to negative now. Of the same amount. So I'm just wondering whether should I book losses and buy something else.
Okay. So Avi, a couple of questions as well, right? So is this part of an overarching portfolio, or have you taken a concentrated bet on HUL?
I've got 15,241 shares of Bajaj Housing Finance as well, which I bought at 150.
Okay, so that's also elevated levels. Let's pull up Bajaj Finance, Housing Finance as well. Just because, and did you get allocation during IPO, or did you? No, you couldn't have. You bought it after, right?
Yes. Actually,
you bought it after.
On the listing day, I bought it, and I thought it will go up definitely. But after that, it went up to 188. I didn't sell at that point of
Got
time.
It. So, and Avi, these are the two stocks you own, or do you own more than that?
Actually, yesterday I sold these both stocks, and I had bought PVR. I called yesterday as well.
Yeah.
But I was not happy with the PVR price. I wanted to buy it below 900, but I had to ended up buying 926. Then I bought back. I sold those shares intraday and bought back HUL and Bajaj as well. So I'm just thinking whether should I book losses and start fresh, or should I just hold on?
Okay. It's a good so I get your question, Avi. The only thing is, and I'm sure Rajesh will weigh in as well, it's not like you bought bad companies. You've bought very good companies, but you've deployed a very significant amount of capital in 2 or 3 businesses, primarily 2 businesses. And because of the overarching pressure that the Indian equity markets have faced, you've lost a lot of capital. So let me go across to Rajesh just for a view. Rajesh, these are frontline companies. It's not like they are small caps, particularly HUL. It's the cream of the crop, but it has disappointed a lot of investors over the course of the last few years. The question is, when April kicks in, when that consumption is expected to pick up, would you expect HUL to pick up as well along with that, or should he book losses, capital losses, which are considerable at this point, in the month of March, so that he can set off those losses over the course of the next financial years and diversify his portfolio? Because there are options available not just in the broader markets, but also for the large caps. I was talking about the fact that 80% of the Nifty 50 trading at below 200-day moving averages. So you have an attractive buying price available on several frontline stocks.
Yeah, I totally agree, Alex. And I have told so many times in meeting also that in this correction, a lot of good stocks are trading at very attractive valuation that they can be having and looked at. I don't say that HUL is a bad company, but it's going through a bad phase. If you look at the numbers were not that exciting. Even third quarter numbers where we have seen bottom line increasing, it was just because of one-time gain of around 500 odd crores. Volumes are down. They have taken price hikes and grammage decrease in many of their products, but still the margins have not improved. And that's just because of the fact that urban consumption has not gone up. And I don't think there are any reasons to believe that in the near future, by near future, I mean the next 1 quarter or so, 1 or 2 quarters, the consumption or demand will go up by any meaningful numbers, I would say. So yes, it's a good company you can hold for a very long period of time, but then there is an opportunity lost, I would say. On upside, I would say try to reduce your position, move some of the money to maybe good stocks in the frontline names like you have Reliance trading at around 1200 odd rupees. You have HDFC Bank, which has done nothing. You have Axis Bank, ICICI Bank. These are some of the good names. And of course, I would go for ITC rather than going with HUL if I have to be in FMCG space. So these are some of the picks from my side. I would like to reiterate once again that HUL is not a bad company. You can hold here for a very long period of time, but then you have better opportunities in the market.
While valuations have corrected, Mahima, you can weigh in on this. It's not like that it's cheap even at these levels, right? I'm talking about HUL. Absolutely. Some of these FMCG companies.
Absolutely not. I mean, right now, if, comparatively, if there are cheaper options available, it's only Imami and ITC as compared to all the FMCG staples out there.
ITC, one of the stocks that Rajesh just spoke about.
And comparatively cheaper.
Comparatively cheaper, yeah. So, but are we... great opportunity for you to go out there and diversify your portfolio, because there are so many good companies that are available at relatively more attractive prices than they were about 3 months back as well, right? So that's the limited point that Rajesh was making, and I think it's a good one. We have to slip into a very quick break. We've got more questions that we will take on the other side, so I'd invite you to stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us on the number that's flashing down there on your screen, and you can also WhatsApp us on the number that's flashing above me. Now, we have our next caller lined up. Srinivas from Coimbatore is calling in. Srinivas, a very good morning to you. How can we help you?
Good morning. I would like to get recommendation for 2 stocks.
Okay, I think we'll have to stick to one stock for now.
Okay.
Yes. Go ahead with the stock that you would want to, talk about.
So I have 2 stocks to be decided. One is CDSL.
Okay.
I bought it for,
You bought it for?
1,814.
Okay.
104. This one bought it. This display is correct.
Okay.
Okay. Currently, it shows loss around 71,000.
Right. Okay, and Srinivas, when you bought this, did you buy it from a longer term perspective? Did you see the fundamentals, or did you buy it from a shorter term perspective and saw the charts?
See, everybody that time around September, I think October, November, were bullish about CDSL, its performance.
Okay. All right. Okay, so I got your query, Srinivas. Rajesh, I'll come to you. CDSL is the counter, and what's the view like and outlook like?
See, we are very bullish on CDSL. In fact, not only CDSL, but these kind of market participants, be it CDSL, BSE or likes. One thing is for sure, markets are have seen better time post-COVID. A lot of new investors has come in, a lot of new accounts has opened in CDSL. They are catering to even insurance ventures also. Yes, from the last 3-4 months after the market has turned wobbly, there has been a drop in their transaction charges and all. But these are temporary phenomena. This is part and parcel of the market where cycles go in a manner. In the depository segment, it's the only listed player because NSDL is not listed as yet. Valuations have become attractive at these levels. Number of new account addition has been slightly down, I would say, but still they are into a very large number there. And looking at the numbers, I think one can buy CDSL at these levels.
Okay. I'm coming back to you. Ratan India is the name of the counter. Niva is the name of our viewer who's writing in from Chennai, and she's bought at levels of 72 rupees per share. The stock has been losing ground. Actually, let me go to Akshay on this one because she's got a 1-year time frame and she's bought at 72. The stock is currently trading above 40. What should she do from the perspective of 1 year?
Well, if I look at the price charts from a longer term horizon, it's nearing its support zone, which is roughly around 35. But somewhere the medium term price structure is distorted once it broke the levels of 60. So even if it recovers from 35, it's more of a respite rally you're going to have. Long term, it might get into a sideways range. So the suggestion is might as well move out of the stock on a bounce. Ideally, around 50 to 55 is the zone where you should consider taking an exit from this stock. So exit at higher levels is the recommendation in Ratan India.
Okay. We've got a next caller, Dheeraj, is calling us from Hyderabad. And Dheeraj, you've got a frontline IT stock that you want to know about?
Yes, sir. My query is regarding Infosys.
Okay.
So, can we accumulate at current levels?
Okay. And what is the time frame that you have in mind?
For the next 4 months, sir.
Only 4 months. Okay. And you've already bought at levels of 1835. When did you buy this?
Like 2 months ago, sir.
Okay. All right. So for a relatively short term, Akshay, you've seen a pop in some of these IT names, but they've largely been under pressure over the last few days. What are the prospects for the slightly longer term?
If I look at the price chart, especially of Infosys, I think since the last 5-6 months, it's trading in a range. Roughly, we are at the lower end of the range. Now, somewhere around 1670 to 1700 is the lower end of the range from where, we can expect a probability of a good bounce back. So yes, if your view is from a 3 to 5 month perspective, this is a very good entry point from a risk reward perspective. Stop loss should be around 1640 on the buy trade if you build your long trade at the current rate, and on the pullback rally you can expect levels till around 1850. So that's the target you should be working with.
All right, so that's the view with respect to Infosys. The next counter that we're talking about is Zomato. Dhanush has purchased Zomato at the levels of 285 and he wants a short-term view on this particular counter. He's asking whether he should continue to hold or exit. He's sitting, I don't think he's sitting on a profit because he's entered at the levels of 285 and right now the stock is trading at 228. Yesterday it did pick up momentum, Akshay, but today it's trading around 0.3% higher. And, with respect to the charts, it did touch a bottom of around 216 levels or 207 if I'm not wrong. What are the charts indicating now? Do you think that the upward momentum from now will continue or no?
Well, if your view is limited to short term, then I think Zomato, the price setup is more neutral. It's been trading in a range, as I see, since the last 1.5 months, and the range is 210. That's the lower end of the band. The upper end of the band works to around 240. So this is the range it's going to be in for the next 1.5 months. So if your limited view is for a month or so, the suggestion would be to take an exit slightly at a bounce back of around 240. However, if it's a more of a long term with minimum 6 months plus of holding, then there is no reason to be worried about. Short term, it might be a bit choppy, but eventually the longer term charts are pretty strong. So short term, take an exit around 240. Long term, you can continue to hold the stock.
Okay. All right. Long term, continue to hold Zomato. Poonam has got the next question. She's writing in from Pimpri in Maharashtra. And she's asking, between Chennai Petro and IOC, which would be the better pick on the basis of valuations? Rajesh, we were just talking yesterday about OMCs having bottomed out and the prospects looking better on the fundamentals. Maybe your gross refining margins likely to improve from this stage. What would you say about Chennai Petro versus IOC?
See, Alex, I think both are on strong grounds. Not only these two, but in the entire OMC pack, including Reliance, I would say on a strong ground. Crude trading at around $70 and Singapore GRMs spiking up. Both are good news for my oil marketing companies, I would say. Their margins would improve in 2 digits. The EPS would improve into 2 digits. And these are very good times to buy because they have been beaten up. They give a good dividend. Valuations are attractive for at least to be a BPC and IOC. These two are better plays, I would say. Reliance would be benefited from the increase of GRMs. But out of these two, I will go with IOC.
All right. That's the view with respect to, all oil marketing companies. Thanks for that, Rajesh. We have our next caller, Shankar from Vijayawada is calling in. Shankar, a very good morning to you. How can we help you?
Yeah, good morning, madam. I bought Apar Industries stocks, madam, in the month of December last year.
Okay.
And now it is showing 41% loss. So
Okay.
can I hold the stock or add or sell? Please advise me, ma'am.
Okay. Shankar, when you bought Apar Industries, did you see the fundamentals of the company?
I saw the fundamentals. It is now, at that time it was very good, but now due to some global issues, I think the stock is going down. So I want advice. I want to add more stocks. Now the stock is already down and trodden. Yeah,
Right.
madam.
Got it, Shankar. Rajesh, I'll again come to you. Apar Industries, what's the view like?
See, it's a very good company, basically doing business in cable and conductor business. Last 2-3 quarters, conductor margins were under pressure. But going forward with the kind of demand built up we are witnessing in the entire sector, I think things are going to improve. At this point of time, one can continue to hold.
Okay. Continue to hold as a view on Apar Industries. Vijeta from Kolkata has got the next question asking about Ircon International with a time frame of 2 to 3 years. What would you do with the stock if you bought it at levels of 211? So slightly elevated, Rajesh. But on the fundamentals, would you hold for a period of 2 to 3 years?
At this point of time, it's no point booking losses because one, the valuations were stretched, and that was the reason for the beaten down valuation. And the second, markets are bad. So I would wait for at least 180 odd levels to get out of this stock. I agree the numbers have been good. Valuations are stretched at this point of time too. So that's a very real problem with these railway stocks, which have been running quite fast in the last 1 year or so. So take a larger time horizon, keep a target of 180 and try to book losses at those levels.
All right, so that's the view with respect to Ircon. Just a quick mention, Trent is up 5% in trade today. And, analysts suggest that there has been a strong uptick in store additions for Westside in Q4. Westside store additions highest in the past 2 years is what they've observed. It today has around 269 odd stores versus that of 238 in December 2024. And Zudio has also added around 37 odd stores till now in Q4, which is why it's in focus, and it's up around 4% as we speak. Moving on to the next.
Let's take a view quickly, Rajesh.
Yeah.
Trent is up about 4%. Does that give you some confidence that maybe there is more buying interest now? Are you comfortable with the valuations as they stand right now? Would you buy?
See, if you talk of valuation at this point of time, they would seem straight, but with the kind of expansion they are going on, almost 670 odd stores of Zudio and 270 odd store of Westside, they are moving to value segment, doing very well. So at this point of time, maybe the valuation would look straight, but if you hold for a long period of time, by long at least 12 to 18 months, I think a target of 6,500, 7,000 would be a decent target.
Rajesh, in one of the recent reports, I also read that, Zudio stores are now being opened in the same city. There are two to three Zudio stores in the same city, which is why there might be some kind of cannibalism which could take place and might impact the sales of these stores. Do you also agree to that?
In fact, I would disagree with that, Mahima, because Zudio is basically into value segment, and we have seen value segment demand going up from unorganized to organized. So I don't think that would be much of a problem with going forward. And not to forget, Zudio, the distance between two stores would be quite considerable, catering to different localities.
So that's the view with respect to Trent. Garden Reach is the next counter that we're talking about, and Isha from Jaipur wants a technical view with respect to this counter. Akshay, what are the charts looking like for Garden Reach?
Garden Reach, it's more of a short-term pullback, possibly which you can anticipate. 1200 is the short-term support base, which the stock has successfully charted out, and I think the short-term journey can see the stock testing levels of 1475 to 1500. So you can buy or hold. Stop loss 1152, target around 1500.
Okay. All right. Santosh from Chennai is asking about Epigral, which is bought at levels of 895, 31 shares. He's asking what the prospects are for a period of 2 years or the long term. Actually, he's been holding for 2 years. Any view on this one, Rajesh?
We have a buy on this. The strong company in chemical sector doing very well. They have done good expansion in caustic. They're doing very numbers have been improving the last 2-3 quarters. We have a target of around 2,400 odd rupees. It did underperform for quite some time, the last 1 year or so, but now the things have improved and it's a buy from our side.
All right, we have our next caller. Sanjay from Surat is calling in. Sanjay, a very good morning to you. I believe you have a query on BPCL.
Yeah, good morning.
Good morning.
Yeah, I'm holding BPCL 250 share at the rate of 350.
Okay.
And I am a long-term investor, madam. I have been holding this stock in 2020.
Okay.
So, is it advisable to add more at this time?
Okay, got your query, Sanjay. Rajesh, he's been a patient investor for this particular counter since 2020 and is sitting on a loss of around 28,000 rupees. What's the view like? Should he add more at the current levels?
Of course, Mahima, as we just spoke about IOC and CPCL, the same story goes with BPCL too, with crude around $70 odd in Singapore, GRM spiking, oil marketing companies are in sweet spot. One can buy this.
Okay. All right. We've got a query that we can actually club. The first one is Abhishek, who's writing in from Mumbai and asking about Jubilant Foodworks from the current level. Rajesh, what's the view? Relatively short term is what he's asking, 5 to 6 months. One, would you ask him to expand his time horizon? And the second is not necessarily comparable, but it's in the beverages space, Varun Beverages. Ahead of the summer, would you buy into this is the question Santosh is asking from Tamil Nadu. So a combo view on these two companies.
You have a right, a combo. You eat pizza and drink Pepsi. That's the kind of combo. Anyways, coming to stocks, yes, Jubilant Food is a good stock, no doubt. Last year, SSG was decent, I would say, if not good. Things have started moving. Dining has started improving. So at these valuation, one can go along on this. But out of these two, if I have to select one, then I would go for Varun Beverages. It's one of the largest Pepsi bottler outside US, doing very well not only in India but neighboring countries like Nepal, Sri Lanka, and all. They have done capex to increase their capacity and moved into non-carbonated drinks. All in all, Varun Bever is better than Jubilant Foodworks at this point of time. But both the stocks are good as far as consumption story is going. And with the kind of weather forecast for summers this time, I think Varun is going to outperform.
And Rajesh, quickly, with the Jubilant Group acquiring 40% in Coca-Cola, do you think Pepsi bottles will be replaced by Coca-Cola in Jubilant Foodworks, like the stores of Domino's?
Quite possible, because they would be trying to move their in-house brands if that happens. So that's quite possible. But still, Varun being one of the largest bottler, I think that's a better choice.
Okay, it's a better choice than Jubilant. By the way, I have neither Pepsi or pizza, but I wish I could. Govind has got the question that is next from Hyderabad. I believe, Govind, you want to know about GMR infrastructure, is that right?
Yeah, Yes, sir.
Please go ahead with your please go ahead with your question. What's your question? What's your question, Govind?
Sir, good morning.
Good morning.
I can bought GMR Power and Urban the price of 143 rupees, 2000 of share.
Okay.
Due to power supply demand, I have observed actually turnaround story. Can I add some more or book losses?
What is the time frame that you have, Govind? Is it more than 1 year?
Yeah.
Okay.
Another 1 to 2 years I can hold it.
Okay. Rajesh, he's bought at slightly elevated levels. I guess that's true for a lot of stocks. But if you're planning to hold for over a year, what are the prospects?
See, prospects look good due to the fact that the company is trying to reduce debt. So that is one of the biggest factors that's going into in their favor. And I think a target of 110, 115 is quite possible in the next 2 quarters. So one can continue to hold.
All right. So that's the view with respect to GMR Power. The next counter that we're talking about is
CG Power.
CG Power, yes. Yeah. Both names confusing. Anyways, so Yash has bought around 125 shares at 847 a piece. He wants to know whether he should hold, sell or average it out. Akshay, what's the view like with respect to the charts?
Well, on the charts, clearly a strong support is in the making at the levels of 560. Strong volumes have been picking up at the same levels. So the whole idea is that this small congestion which is building up at the levels of 580 to 600 should see a positive breakout, and you can see the stock moving up for levels of 775 to 800 with a time horizon of around 6 months. So definitely the idea is to buy more in case you're open to, or hold. Stop loss would be below 530. And you can roughly target around 780 to 800.
We are, by the way, trading very close to the high point of the day for the benchmark Nifty 50, trading with gains of close to 1%, above 0.9%. It is time for the rapid fire segment, and this is where we try and take as many questions as possible over the span of 2 minutes. And a message to our experts: to keep your answers as precise, as concise as you possibly can. The first question we're taking is, in fact, on LIC Housing Finance. And Saundarya is asking this question. She's from Mumbai. She's bought at levels of 555. What are the long-term prospects? Would you add on dips? Rajesh?
It's add at these levels too. So valuations are great.
All right. South Indian Bank is the next counter. Umesh from Kanyakumari is bought at the levels of 25 rupees. Should he hold, sell? What's the view like, Akshay, on the charts?
Hold, stop loss 23 and target roughly around 26.
Tilak Nagar Industries is the name of the counter. Akshay, I'm coming back to you. 325 is a buy price. Rudra from Vadodara wants to know 1 year time frame. Should you hold or exit?
Exit at high rates. 260 is a good level to take an exit.
All right. Vinay has bought Utkarsh Small Finance Bank. His quantity is quite high, if he's typed it correctly. 34,000 is the quantity. What's the view like, Rajesh?
Exit.
Okay. NMDC bought at levels of 63. This is Vinay Tikchandani who wants to know, bought quantity of 4,400. Akshay, what would you do with this?
I would look to exit around 68 to 70 from a short-term perspective. Long-term, it is a hold.
All right. RI's next counter. Kalyan Raman is saying that he's an HNI and he wants to add more of Reliance at the current levels. Is that the right strategy to adopt, Rajesh?
Yes, keep it a view of 2 years and buy.
Okay. Sun Pharma purchased at levels of 1722. Gul wants to know, should you hold or should you exit based on the tariff threat? Rajesh?
Continue to hold, add around 1400.
Okay. ITC Hotels, 300 shares bought at the levels of 484. Should he sell or keep holding? Rajesh, what's the view like?
484, I don't think it went up to that levels, but still it's a buy from our side.
Okay. RBL Bank, would you hold or exit if you bought at levels of 261, Rajesh?
Hold.
Hold. All right. Well, we've covered quite a bit of ground. Gentlemen, thank you so much for joining us, for answering all the questions you did. Absolute pleasure, as always, having you on the program. All right. And that brings us to the end of this edition of Ask Profit. From Mahima and myself and the team that put this show together, thank you so much for watching. Do stay tuned. Know Your Company is up next, and we've got a nice one lined up for you.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.